Hey, rich friends, it's your girl Cha reporting live from the Money Mantra, and we are back with another Forex education video. The purpose of this channel is to help as many people as possible become independent and profitable traders within the foreign exchange market. So, if there's something that you're interested in learning, this is going to be a channel that can help you. So, you are going to want to subscribe. And if when you get to the end of the video, you found that it was helpful, give me a thumbs up, leave a comment, or share it with somebody who you think this video can help. So today I'm going to be doing a trade breakdown of this trade that I dropped in my group chat on June 9th, 2023 at around 10:36 a.m., which we can see right here. So I pretty much took a screen grab of my trade from TradingView and I dropped this trade in the chat, and I'm going to be pretty much reviewing it and let you know why I dropped it. So here we see a little bit more information about the trade. This is typically how I'll format things. When I do drop it in the chat, I'll put the date so we can see it was June 9th. The currency pair was Euro USD, which is also here. I said they can get in that market execution. At that time, the market was at about 1.0760, as we can see, or they could set a sell limit for 107,750. I also provided them with a stop loss, a 1-to-1 risk to reward ratio TP with the TP at 10735. And I also did a 1 to 1.5 risk to reward ratio with the TP set at 107,150. And as always, I always encourage my students and mentees to always do their own analysis to just double check, because I'm not always right. And it's nice to have an additional set of eyes. So what we're pretty much going to do is I'm going to take you guys to TradingView, and I'm going to be explaining why I decided to take that trade when I took that trade. So we can see, based on my short position box, right? This box right here just tells me where my danger zone is. That's what I like to call the red zone, and where my profit zone is. Now, if I'm getting into a trade for a sell, which I did, my danger zone is going to be at the top, anywhere within the red area, because if I am speculating that price is going to go down, if it goes up, that's dangerous for me. And now I'm at risk of losing money. And if I'm going for a sell, the green, which is my profit zone, will be at the bottom, because if I'm expecting price to go down from here, like I dropped in the chat, 107,750, then anywhere below that price would be profit. So my profit target for TP1 was 107.350, which is here. And let me turn this around, y'all, which is here. And we can see the candles actually ended up hitting the bottom of the green zone, or my profit zone. And this is what we call TP1. So TP1 was reach for this trade, which is great. And anybody who participated in this trade was able to catch 40 pips. Now, the reason why I decided to take this trade, I'll typically look at my chart over a few different time frames. So if I go back to the weekly time frame, and this is where around where I took my trade at. So let's just zoom in a little bit, because that's not giving us a lot of information. So I have this purple line here just so it's easier to see where I actually took my entry point at. And I'm going to start on the 4-hour, because that seems to make the most sense right now. So first and foremost, when I was looking for what am I going to do when I got into this trade, the first thing I noticed was this area of consolidation, right? I saw that price was having a hard time getting any higher than this area right here. And typically when that happens and price stalls out, that's just giving me a heads up that the market may be setting up to do a reversal. So I like to call that my liquidity watch. And I had my liquidity watch over my resistance area, letting me know that anywhere up here where I have this black line would have been a great place to sell. So on my actual candle, I like for it to be a rejection close to where the previous rejections were. And I like to enter my trade on maybe the third or fourth rejection. So here I have one rejection at the same price area. I had a second rejection at the same price area. And then the third rejection at the price area let me know, okay, this trade really has the potential to sell. The other thing I noticed was that this candle was below my 200 EMA. And whenever my candles are below my 200 EMA, I see that as another confirmation for a sell. So far I have my liquidity and resistance. I also have candles falling below my 200 EMA, which is perfect. Now, this one was a little tricky because typically I like for my momentum to already be crossed below the dotted line, letting me know that the selling momentum is picked up. But if it's not fully crossed, if it's at least facing down, that lets me know that the direction of the market is going down, and that gives me another confirmation for a sell. Now, the stochastic told me a few things about this trade and why I wanted to get in. It told me that the orange was over the blue. And for me, that typically signals that the sellers are in control and the market is going to go down. So not only did I have a couple confirmations, right, letting me know that this trade was starting a bearish trend, I also had one of my favorite entry signals, which is the cross down from the overbought area. Literally, once the market crosses down, that's typically when the selling action will pick up, and vice versa. Once the market crosses up, like we see right here, that's when we'll get more buying action or more green candles. So I had a lot of confirmations and things that were really pushing me towards the sell. But we can, of course, zoom in and go down to the hour, and we can get a little bit more insight about this trade. So again, we can see even more of those wicks, right? Those rejections, resisting, letting us know the market was going to turn around somewhere in this area. Not only that, on the 1 hour chart, we actually do have our momentum below the zero line, which is my entry signal for the trade. And then we had an additional cross down below the 50% line, letting me know that this trade was going to continue to sell. That is what I was feeling confident to do. Now we can take this thing down to the 15-minute and we can look at it and see where we entered, right? And this trade was actually really close because it got exactly, right? It got exactly where I put my TP. And that's not typical. Sometimes it'll continue to drop, but this was a really close trade. But just zooming in, right? And this is where we enter, right? We still have those rejections here, right? We have our candle actually crossing below the EMA, which is another great signal for me. Down here, we have our MOM officially below the zero line, which is great. And then we also have our stochastic, the orange is over the blue, and it's crossed below the 50% line, letting us know that this trade is going to sell. Now, this for me was only a 40 pip trade. I didn't get to catch those 60 pips, but that's okay because we always live to trade another day. So I really hope that this video was helpful and just how I broke down this trade and how I was able to catch 40 pips in EURUSD. And yeah, if you guys have any questions, feel free to send me a direct message on Instagram or leave it in the comment. So I hope this video was helpful. Until next time, we're friends.